Mr. A.V. Rajwade as well joins in to talk about the currency. Mr. Rajwade, you've been talking about, or rather been extremely pessimistic about the currency for many days now. We're already at 64. How much more weakness to go? And this is really without any intervention from the Reserve Bank in the last 2 days.
That's true. I mean, I hope that they're waiting for the rupee to find a level where our domestic economy becomes competitive in the global market. I think that still is to be reached, but one doesn't know what the RBI really has in mind. I mean, if they are keen to arrest, which they seem to be, the kind of measures they took in tightening liquidity and allowing bond yields to rise so much, knowing fully well that this is going to have an impact on growth, on stock markets, on the other macro variables, still they took the chance. So it looked as if they wanted to stop this right there. After that, I think nothing very much. The only new thing yesterday was the sort of on some TVs or whatever, some taxes and so on. I don't think that that's going to do anything whatsoever in terms of what's happening in the on the exchange rate.
Mr. Rajwade, a moment of crisis always demands hard actions. What could be that hard action? Because monetary action have not backfired. So what are the options left now?
I think, to my mind, the first thing the policymakers need to review is the kind of index they have been using. I think that index does not give any reasonable measure of the competitiveness of the domestic economy. So have a far more logical index where the rupee needs to be for the economy to be globally competitive. We can't afford to have $100 billion of deficit year after year after year. It is eating into growth, it is eating into output, into jobs, into everything. So first is that. Second will be that is going to lead to inflationary pressures, which means we will have to curb the inflationary pressures very strongly through extremely tight monetary policy and extremely austere fiscal policies. Now, it's very difficult to imagine a government which is facing elections in less than a year being able to take the kind of hard measures that would need to be taken even after the rupee finds a level which at which we can expect the economy to be competitive in the global market. So I think we are in for some hard times. One possibility, of course, is that the election date may get advanced in the hope that, okay, let's postpone the problem until after that. And then either we or whoever comes into power will need to take some hard decisions. I think we are in for some pretty hard times, not just on a day-to-day basis, but probably for a year or two.
That hard decision is what I'm trying to understand from you.
Yeah. You see, why is the economy uncompetitive? I think if we go to the fundamentals, what has happened is that our inflation rate has been much higher than in our trading partners, which makes our cost of production higher. And what we seem to have done is that we followed a particular exchange rate policy for almost 15 years after 1993, the liberalization of 1993. After that 15 years, the central bank, whatever the public rhetoric, there is enough empirical evidence that they were managing the rupee in real terms. Real meaning adjusted for inflation, which is the only relevant term. So for 15 years, they did that very successfully. We had, in fact, 3 or 4 years of current account surpluses. After that, also, the deficit never went beyond $10 billion, which was extremely well within the manageable numbers and so on and so forth. Now, 4 years back, without any public discussion, announcement or anything, we seem to have changed the policy, although the rhetoric remains the same. We have no levels in mind. We intervene only when there is volatility. Now, yesterday, you know how much the rupee fell. If that is not volatility, then I do not understand what volatility is. So I think the problem was the policy. And after that, what has happened is that because capital flows were very strong, the rupee appreciated in real terms very significantly, making our economy uncompetitive in global markets, leading to about $200 billion of trade deficit, and about 100 billion of current account deficit. And there is no way that the rest of the world is obliged to finance it year after year after year. So I think number one is doing some study on what exactly is the right level at present, making sure that we get out of this feedback loop of inflation needing rupee depreciation leading to further inflation. And the only way to get out of that feedback loop will be through extremely tight monetary and fiscal policies.
Mr. Rajwade, really appreciate you, giving us really that insight on the economy as well as the money markets. Good to have you on the show as always.